Good morning, good afternoon, and good evening to everyone joining us today. Welcome to Mines and Money Online Global Connect panel session, capitalising on the mining investment potential of Queensland. The Queensland Government, through Trade and Investment Queensland, is proud to be a headline sponsor of this event, the fourth year we've sponsored Mines and Money. My name is Anthony Christensen. I'm the Director of Mining, Resources and Energy with Trade and Investment Queensland, based in Brisbane, Australia. We've just heard from the Queensland Minister of Resources about the importance of the resources sector for Queensland. Whether it's coal, gas, minerals, Queensland is a jurisdiction with a demonstrated resource endowment coupled with a track record of supporting resources investment and development. Queensland continues to see new milestones reached on billions of dollars of investment into its resources sector. Importantly, Queensland's resources sector continues to see both the entry of new investors to the state, but also significant new investment from existing asset owners. Today, I have the pleasure to host a distinguished and diverse panel to bring to the discussion the investment perspectives of diversified multinationals, a private equity manager, and a resource company incubator, who are each capitalising on the mining investment potential of Queensland. With us today is Mr. Kenji Azuma, Senior Vice President and Head of Business Strategy and Planning at Mitsubishi Development, Mr. Shigeru Saito, Managing Director of Sojitz Development, Mr. Jason Chang, Chief Executive Officer and Managing Director of EMR Capital, and Mr. Mike Collins, President and CEO of Crest Resources. To give the audience a heads up as to what we'll be doing today and how the discussion will progress, basically we will first discuss what each of these panel members are doing in Queensland and what their investments and resources activities are. We'll discuss the circumstances and considerations that supported these investments. And finally, we'll turn the panel discussion to what panelists see as growing investment drivers and, of course, potential future investment activities. As we have registrations from over 80 countries for this Mines and Money Online Connect event, I think the audience would benefit from a description of the panelists' companies' involvement in the Queensland resources sector. Starting with you, Kenji, can you give the audience an outline of Mitsubishi Development's activities in Queensland?
Good morning. Thank you, Anthony. And probably I'd like to start with the introduction of Mitsubishi Development. Mitsubishi Development is a 100% subsidiary of Mitsubishi Corporation, one of its global network of 1,700 group companies in 90 countries. We started actually in operation in Australia in 1968 as a mineral resource investment platform in Australia. And for more than 50 years, in addition to our commitment to our stable supply to Japanese customers, we have also significantly contributed to the local and state and national economies in Australia through our mining operations. As you may know, one of our key assets is the BMA, BHP Mitsubishi Alliance, a 50-50 joint venture with BHP. We have become the largest exporter of seaborne steel making coal in the world. And BMA was established in 2001, owns and operates 7 coal mines and Hay Point coal terminal in Queensland. BMA employs approximately 12,000 employees, pays around 800 million wages, and spend around 2.7 billion with local suppliers on an annual basis. In fiscal year 20, Mitsubishi was the 8th largest taxpayer in Australia. And we recently just announced the agreement with Glencore to acquire a 30% interest in the Oricum bauxite project in Queensland. This marks the first step in optimizing and future-proofing our portfolio as the world moves towards the low-carbon society. That's it from me.
No worries. Thank you very much, Kenji. Likewise, Shigeru, can you briefly outline Sojitz's investments into the Queensland resources sector?
Thank you very much for your introduction, Anthony. I'm pleased to meet you. And my name is Shigeru Saito, Managing Director of Sojitz Development, which is 100% subsidiary of Sojitz Corporation, one of Japanese Sogo Shosha. Sojitz has investment in various industries in Australia, and here in Queensland, Sojitz Development has been a long-time player in mining sector, especially in coal industry, for more than 15 years. As of today, Sojitz has invested in 5 operating assets and 3 greenfield assets. Sojitz is mine operator in 3 of 5 operating assets in Minerva, Meteodown South, and Gregory Kleiner. And Sojitz is also a minority JV partner for remaining 2 operating assets in Jerimba East and Lake Vermont. One of our unique strategy is that Sojitz has become a mining operator since 2011 through its 100% subsidiary named Sojitz Blue, on top of trading and financing function. This strategy brings our company many advantages, such as wider and deeper relationship with government and stakeholders, better understanding and expertise of mining operation. Using this expertise, Sojitz Development and Blue has expanded our business. For example, in Meteodown South, Sojitz has developed this mine from greenfield and expanded its capacity up to 1.5 million ton per annum in 2020. In Gregory Kleiner, Sojitz restarted this mine within 1 year after its acquisition in 2019, then achieved a stable open cut operation in 2020, and now formally committed to reopen underground operation within this year. On top of this, this strategy is also helpful Sojitz Group to consider other opportunities in mining sector all over the world. That's a summary of our company. Thank you.
No worries. Thank you very much, Shigeru. Jason, likewise for EMR Capital.
EMR Capital is a mining private equity firm with global operations. We own and operate 9 projects and mines around the world in 6 countries and have offices in 3 others, which includes obviously Australia as the core operational hub for our team in Hong Kong and Singapore, as well as Cayman Islands, which is where our funds are domiciled. The countries which we operate in addition to Australia is Zambia, where we have a copper mine, Spain and Utah, where we have 2 potash projects, in Chile, which is copper, and UK, where we have a metallurgical coal. EMR is a private equity firm, but a very deep operational background. Fundamentally, our model is to acquire high quality producing mines and make material operational improvements ultimately, which is where we hope to achieve an attractive return for our investors. We have more than 3,000 employees worldwide. We focus on 4 core commodities, copper and gold, as well as metallurgical coal and potash, all of which we feel have a strong macro thematic from a demand, supply, and size of market perspective. We have most of our capital invested in Australia and most of that in Queensland. So I'm very happy to report, Anthony, that we are very excited about our 3 mines in Queensland. We have a gold mine called Ravenswood Gold in northern Queensland near Townsville, near Charters Towers in the Ravenswood district. And we'll talk a bit more about that. We have a copper mine called Capricorn Copper near Mount Isa. And we acquired a metallurgical coal mine called Kestrel, in fact, next to Gregory Kleiner, next to our friend Sojitz. Very excited about that. We are producing, I think this year, 6 million tons of metallurgical coal. So looking forward to doing a lot more in Queensland, Anthony.
No worries. Hey, just regarding your Ravenswood asset, back in 2020, EMR spoke of hitting a 200,000 ounce per annum production rate. How by the end of 2021, how are you going at hitting that target?
Going well, Anthony, going well. Happy to report we're on track. I think it'll be early 2022 Q1. We're going to start mining at a rate of 200,000 per ounce. By the end of this year, I think we're estimating This year's production about 100 to 125,000 ounces. That's largely on budget, on schedule, on track. But we're very excited. I think that makes it at 200,000 per ounce. That should make it just about the largest gold mine in Queensland, I think. But there's a lot more there, and we're looking around the region in Queensland, near Ravenswood Gold and other parts of Queensland for more gold and copper.
Yes, and regarding your Capricorn copper operations, cobalt resource, how is that shaping up?
Oh, there's a small resource at the moment. I think the contained metal is about 20,000 tons, 21,000 tons. But I think the idea is to grow that resource dramatically. So lots of cobalt, of course, in that part of Queensland. And as Mr. Azuma-san talked about, we are also very focused on future-facing commodities. Of course, copper is the hub of that, but we're looking at a variety of other metals.
No way. And I guess finally, given this session is called Capitalising on the Mining Investment Potential of Queensland, I have to ask you, is there anything new you can tell the audience about the 29 Metals IPO?
It looks like the press know more about it than I do. So if you read the press, then you would have followed the story. And I can't confirm or deny all those things in the media. We have lots of prospectus. It's with the regulators to review, and all going well. We should see the birth of a new base metals company.
No worries. Thanks very much, Jason. Mike, can you tell the audience about Crest's company portfolio, and in particular about your Allura Vanadium project here in the Julie Creek region?
Yeah. Thanks very much, Anthony. Really appreciate being on the panel today. Crest is a natural resources publicly listed company in Canada. We have assets in North America and South America, and as well in Australia, ranging in commodity types from gold to carbon, copper. We've got technology deals around refining of graphite, as well as protein-based milling reagents, and of course, the Allura Vanadium project just north of Julia Creek there in Queensland. That project we've sort of envisioned as a really great opportunity to get into a battery metal that we see has a very strong growth profile going forward, and develop downstream capacity building into the battery market for static battery installations, and also power supply contracting down the road. So
no worries. Thanks very much for your responses there, panel. Turning to the why of your investment and activities here in Queensland, going back to you, Kenji, from Mitsubishi's perspective, what were its considerations in selecting Queensland as a mining jurisdiction in which to invest?
Oh, yes. As I mentioned, Mitsubishi is a strategic long-term investor, and we always respect the value in the long-term relationship with the local government, where we can create jobs, support business and communities. In addition to our investment criteria, obviously, such as cost, quality, and resource volume, we always carefully review the geopolitical risk and stability for the regulatory procedures. This is why we have been in Queensland for more than 50 years, in addition to the long-term relationship between Japan and Australian government. And we also like the fact that Queensland has a good infrastructure, such as Leyland Port, and a highly skilled and productive workforce. Of course, Queensland has also a logistic advantage to the Asia-Pacific customers for the growing demand for our product. That's why we are investing in Queensland.
No worries. Thank you. Shigeru, please feel free to add to Kenji's comments. You've mentioned previously that Sojitz is taken an operator responsibility. Has that role as an operator given you any further confidence in investing in Queensland?
Thank you. Indeed, what I'd like to say is almost covered by Mr. Azuma already, but I'll try to add something. So first one is project itself, this means each project should satisfy end user demand and also our company's group strategy with a reasonable economics. Second one is very good governance here in Queensland, as well as government support to foreign investors. In both Queensland and federal government maintain its legal system reliable with the transparency. This is a very good factor actually. And third one is infrastructure, as Mr. Azuma already mentioned. And last one is a strong trust already established between Japan and Australia. This is an important factor, especially for Japanese companies. That's all. Thank you.
No worries. Okay, thanks very much, Mr. Shigeru. Jason, EMR has more mining operations here in Queensland than anywhere else in your portfolio. Why Queensland for EMR?
You're quite right. You're quite right, Anthony. And the statistics is that we've got 9 assets around the world. Of the 9, 4 in Australia. Of the 4, 3 in Queensland. So I can confirm that. And I think more than 1,000 employees up in Queensland. Look, so our mandate is global, and we're looking for assets, every day. We've got a large team of people sourcing and have experience, I can say, more than 30 countries around the world. So Queensland, for a range of reasons. One, obviously the geology. I mean, we have to go to where the ore is. And when you think about copper and gold and metallurgical coal, I think you can say Queensland is very much the premier jurisdiction, which has 3 of the 4 focus commodities that we have. And then when you add the battery minerals, as Michael talked about, then there's a lot more there. So firstly, I think the geology is key. I mean, we have to be guided by that. And secondly, opportunities. Queensland still remains a country, a state where we see a lot of potential, a lot of opportunities, and in many ways, I guess that's why you have big companies and good companies like Sojitz and Mitsubishi there in a very big way, as Mitsui as well, and Itochu and the Koreans and the Chinese. If you look at the state of Queensland, I think it's very clear. Our neighbors around us, we are surrounded by all the largest mining houses and the best mining houses in the world. So that gives you a bit of an idea. And then when we look at, where we want to invest, as Azuma-san talked about, the geopolitics is very, very central. And our view is when you look at ESG, decarbonization, in not too distant future, and it's already starting, a lot of investors, a lot of capital markets will start looking at the source of where we mine and how we mine and the labor behind it, how it's done, the government. So I think very shortly you'll find that, for lots of commodities, the options that an investment house like us have in terms of the right country, that's going to narrow down dramatically. So from an ESG perspective, Australia, Queensland, is right up there, and that's very, very key. And then if I go through the list of factors, partnership opportunities, very central. We're in Queensland with partners, and it's easy to find co-investment capital. People will come alongside us. We manage a lot of US capital. We manage a lot of Asian capital. We are in Kestrel with Adaro, one of the largest coal mining companies. We are in Ravenswood Gold with Golden Energy and Resources, another very large Singapore listed company. We're in Kestrel with Mitsui. So lots of good partners. And that's also a very, very important theme for us. Azuma-san talked about infrastructure. I absolutely agree with that. Rail, port, electricity, power, water. If you look at some of the countries in the world, how many of those boxes can you tick? In some of the best corporate jurisdictions, water is a major issue. And fortunately in Queensland, we got lots of water at Kestrel and at lots of our other mines. And I think finally, and I should say, right at the top of the list is people. And of course, if you're in mining country, then you're going to get the best people, the best talent, and ultimately mining is a people business, right? So if you can't get the right skill sets, you're not going to go as well as you should. So lots of reasons, Anthony. Those are some of them. As I said, we remain very excited about the 3 operations we have in Queensland. We've got multiple offices, multiple people, multiple opportunities, and we're going to continue to, do a lot more in that state. Thank you.
No worries. Thanks very much, Jason. Mike, Crest's Allura project is in a much earlier phase in the project life cycle. Can you just tell us a bit more about why vanadium and why Allura in particular?
Well, I think vanadium is pretty interesting in the battery metals sector from a Canadian perspective, because we can look into Australia and see the contracting and deployment of flow batteries is a year or 2 ahead of what we're seeing in North America and other places. So we see this as a real opportunity, just as a window into where our business is going. Beyond that, Allura is relatively early stage, but the geology is very regional in scale. It's something where we can quickly and efficiently, with low risk, drill out and define resources. We brought the project. We also picked up a feasibility level process flow sheet that came with it, which gives us sort of very much a horizon where we're heading for, and we know what we're looking to, the markers we're trying to meet to turn this into a production story. And we're also working to validate that flow sheet. But one of the things that Crest tries to do is be a nexus between technology and dirt. And that goes from de-risking our projects to with things I've just sort of indicated, but also looking at new technology. And we've got some interesting milling reagent technology we think we can apply to this. That'll be a step change in terms of the economics of processing. So it really is a super opportunity, something that we want to run with and move to production story very quickly. Beyond that, Queensland, as Jason's pointed out, a lot of great people, very clear pathway to development of resources in terms of permitting and things like that, infrastructure around the project. We looked at vanadium assets in the US, very similar, but the adversarial relationship that you have in the permitting and court processes there, it just slows everything down so much in comparison to what we see as our timeline in Queensland. So great place to be.
Yeah, you've touched on the importance of some of the metallurgical developments there. So you've gone for a sedimentary shale-hosted vanadium rather than the more conventional iron oxide-hosted deposits. What were the key advantages you're seeing in that space?
Blasting and processing. We look at the shale-hosted deposits as being potentially free ripping, or if required, very very small amount of blasting to move rock. The topography in this deposit is very flat lying, so your strip ratios are really good. And then as you move the rock into a processing phase, you're not spending enormous amounts of energy in getting it to a size that you can separate your vanadium from your waste. That matters not only in terms of cost, but that matters in terms of greenhouse gas emissions and our overall impact. And we're trying to produce something for the green revolution, the battery revolution. Doesn't make a whole lot of sense to be using enormous amounts of energy to do that. So it's a real pivot there. Lowers CapEx and OpEx, and we also see in these deposits potential for high purity alumina byproduct credits, and that reduces our costs and makes us more efficient as well.
No worries. You, as a newcomer to Queensland, what did you know about the jurisdiction? And you've touched on some of the approvals processes and considerations there before. Can you expand on that a bit?
Yeah, so I actually, I'm Canadian, Canada-based, but I had the opportunity to work for Mining Plus for about 5 years, which is a Melbourne-based engineering firm. And through that, I've had a good window into the permitting and development process in Queensland and other parts of Australia. So really, that was sort of key, that understanding, and also contacts that I've had from that business relationship. And then when we came in, our partners as well were very sharp individuals, and that's helped us move forward. And I found, yeah, the permitting and everything else has gone very smoothly and been able to move things ahead quickly.
No worries. Thanks very much, Mike. Turning to the future now. Shigeru, what investment drivers does Sojitz see as increasingly important as we move towards 2030 and beyond? And given these drivers, do you see a future with new coal investment?
Thank you. I think as Jason mentioned, the ESG management is important, especially decarbonization is one of the key drivers for our company's future investment. As mentioned, Sojitz development is a special purpose vehicle for the coal mining business at this stage. So frankly speaking, just in my view, decarbonization needs some time because innovations, infrastructure, and related legislation should be required, and that needs some lead time. So during this period, coal will play an important role as it is, especially in Pacific economy. Therefore, Sojitz development will keep our current coal mining operation for stable supply to our end users, and would like to contribute to regional employment and community during this period. However, we have to keep carefully monitoring the progress of innovations, carbon taxation system, and international carbon offset system, because these systems might strongly impact on our current business in future. On the other hand, Sojitz is seeking opportunity to expand our business from ESG point of view. On June 10th, Sojitz together with NS Corporation has announced the start of construction of 204 megawatt solar farm in Queensland, which is one of the largest solar projects to be undertaken by Japanese company in Australia. And one of our coal mine, Gregory Platinum, will purchase renewable power from this project to reduce its Scope 2 carbon emission. This is our first step for future decarbonization. In relation to solar power, Sojitz sees Australia and Queensland as a high growth market, considering its huge land, and also the fact that country has 1.5 times the level of solar radiation compared to Japan. In addition, there is a growing number of companies that are keen to procure a stable supply of renewable energy through corporate power purchase agreements. Sojitz aim to not only develop the project moving forward, but also to provide a stable supply of renewable energy to such companies in Queensland in order to contribute to realization of the decarbonized society. Sojitz is also seeking for further business opportunity, not only in renewables, but also in various areas such as green, blue, hydrogen, and ammonia, critical minerals like battery minerals, circular economy like waste to energy, and so on. In addition, Sojitz development think mine rehabilitation and mine water is also important in future. Sojitz development established a company named Sojitz Green to create a new business in these areas. For mine rehabilitation, we are now introducing advanced technology in our existing mine rehabilitation and would like to expand to this business outside near future. For mine water, we will start a research and development on agriculture using mine water at our mine site in collaboration with university and farmers. This is our challenge to contribute to joint development between mining and agriculture in future. Thank you.
No worries. Yeah, Shigeru, you touched on decarbonisation and your recent Edenvale solar farm investment. Can you tell the audience a bit more about this investment and the rationale behind it?
Yes. This project marks Sojitz and Enel's first solar project in Australia, and Sojitz and Enel acquire 100% stake in Edenvale Solar Park project, located at Western Downs Council, approximately 300 kilometers west from Brisbane, by Sapphire Energy, a joint venture holding company equally owned by Sojitz and Enel. In terms of project structure, Sojitz and Enel executed a 16-year project finance agreement as well as the EPC contract. The plant is planning to be commercialized from second half of next year. Of the renewable energy to be produced at this solar farm, 70% will be sold to local electricity retailer to provide a stable supply of renewable energy, while part of the remaining 30% will be supplied to Gregory Clan coal mine, which Sojitz owns and operates, as mentioned before. In doing so, Sojitz aims to reduce its scope 1 and 2 carbon emission based on the decarbonization policy, including in Sojitz long-term sustainability vision for 2050. That's all. Thank you.
No worries. Thanks for your comments there. Turning to Kenji and Mitsubishi Development, given all these considerations, what prospects does Mitsubishi see for future investments in Queensland, and what will be your focus?
Okay, so well, thank you. In terms of the decarbonization, I totally agree with Mr. Saito that we definitely need to consider the transition time. So we will keep our commitment to the BMA operation, but at the same time, we believe the aluminum will be another direct contributor for the in terms of recyclability and its lightweight for the electric vehicle. So as you may know or not, Mitsubishi Corporation is originally coming from the trading company and one of the largest trading company for the aluminum. So we have been invested in the aluminum smelting assets over the years, such as the Mozal project in Mozambique or the Boyne smelter in Queensland. So in terms of the raw material for the aluminum, for the bauxite investment opportunities are very, very limited due to the geographically uneven distribution of the resources and the fact that most of the large scale and high quality assets are already being secured by other resource companies. So we definitely believe that the aluminum or the bauxite will our future commodity. Therefore, we also like the fact that the Orkun, which I previously mentioned, is the well located to the largest consumer of the bauxite, which is China, and Queensland is an excellent business environment compared to other countries with the bauxite reserves, such as Guinea. So in addition to the economic value of the investment and also the environment value for those decarbonized society, the investment, we believe that the investment has this Orkun has the potential to deliver stronger social benefit to the local community. Therefore, we always try to create the triple values such as economic value, environment value, and social value simultaneously as a key principle of Mitsubishi Corporation. So in addition to that, in terms of community engagement, we have a deep respect for the traditional owners and recognize their strong connection to the country. We believe by working openly and transparently, we can create a tangible benefit for the local community that align with their aspiration for the community growth. That is our strategy for the future investment.
All right, thanks very much there, Kenji. Jason, what investment drivers and considerations does EMR seeing as growing most in significance as we move towards 2030 and beyond? And how do you see Queensland and Australia positioned in relation to these?
So fundamentally, we are looking at some of the, firstly, the macro themes, demand, the usual demand and supply. We also look at the size of the market. We want to be in big liquid markets, lots of opportunities to buy into, and lots of opportunities to monetize over time and earn returns for our investors. So if you look at that, and that's the reason why we are focused on copper, gold, metallurgical coal, and potash. But as Saito-san and Azuma-san talked about, and Michael, decarbonization is clearly a major factor, and increasingly so. I mean, that's going to be more and more important over time. We manage more than $3 billion of capital, a lot from the US, a lot for pension funds, endowments, foundations, family offices, and it's very clear to us that that's very important to private and public capital. So I think the ESG element and decarbonization is going to be a clear driver. So that has, I guess, two impacts, and Azuma-san and Saito-san has talked through a lot of that. It's relevant to commodity selection, and as well as the source of that commodity and how that is mined, right? So if you look at commodity selection, copper now from a demand side, it was always a very strong demand, but now with electric vehicles and energy transition, copper is even more important. So the demand side we are very bullish on. Driven by all of that, and not just by Asia, but across the world, right? Across the world, if you look at all the infrastructure spending, all the focus on energy transition, copper is really at the hub of all of that. And of course, supply is very constrained, and increasingly so. I think we all agree with that. It gets harder, it's more costly, and the grade's decreasing, right? Dramatically. There was a time where we're all chasing 2% grade and above, and now 0.5%. If it works, it's beautiful. So that's something that I do think the investment markets miss, right? The world missed this point about how difficult it is actually to mine, increasingly so, right? And then when you couple ESG on top of it, the source of that copper is important, right? If you look at all the copper basins around the world, you can work out that eventually investors are going to, and that's already starting, they're going to look very, very hard at where do you get your copper, where do you get your coal, where do you get your gold, and where do you get your potash, right? So if you think about that, and to me, that's one of the big themes. Then you narrow your focus, and then you work out actually the world will start acknowledging the mining multiples should be a lot better. Michael, you must agree with this. The mining multiples should be a lot better than some of the other sectors. So I think that time is coming. Obviously it's a cyclical industry, but there's no question the acknowledgement by capital markets and by the global audience around some of these themes are going to be increasingly important. So we focus on 4 commodities, but like Michael, we are also very focused on those future-facing commodities. We're trying to work out, where is it we want to play. It's probably going to be a combination of, all of the metals that Michael talked about. So that's something we're chasing. And Anthony, I think if you look at those commodities, then it's terrific to have it all in one state, right? I mean, we're also trying to not to be all things to everyone as an investor. We want to be leveraging our existing infrastructure, where our existing operations are, where the people are, where we can get good access to government, obviously with mining, government relations and the government process is so crucial. I mean, we've had some great experiences and some not so great. So we are gravitating to where we've had better experiences. So Anthony, we are excited about being in Queensland. We've got 3 major assets there. We're going to grow that portfolio, and it's a good place to be.
No worries. Look, I'm getting the hurry up here to wrap the session up, but I want to turn to you, Mike, for one last question. Can you give the audience an outline of your project advancement timeframes? Plainly, you know, vanadium's playing into some of these changing commodity profiles. So I'm sure the audience would like to hear about your development plans.
Yeah, so really we've just finished a drill program looking up dip into oxidized and more near surface material to try to build a resource out there. Our met programs are ongoing, but we'd expect that to be sort of coming to an end in the next couple months, our preliminary work there. So I guess an Australian scoping level study or a North American PEA level sort of study in the next sort of few months coming out, and then really driving to get an actual, a much more significant drill program, a mine plan in place, and looking to go forward on studies and permitting. We're really feeling very positive about Alaru and the viability of the project, but also the long-term demand of vanadium, and we believe that by coupling the resource with the downstream battery build out and power supply concept, that we give the company a balance, because there's, you know, possible supply constraints, possible, you know, your batteries, you don't have cheap vanadium for your flow battery, then it's not economic anymore. But by building through a complete circuit, we can have a much more consistent presence in the market and pushing forward on that sort of basis. So working on that production end as well as the mine development too. So.
No worries. Thanks, Mike. Look, just to wrap this session up, today we've heard from a range of companies who continue to capitalise on the mining investment potential of Queensland. Their investments have demonstrated the resource endowment and mineral potential of Queensland is underpinned by a track record of government support, ESG credibility, established links with and proximity to key growth markets, strategic stability, and the required hard and soft infrastructure ecosystems needed to support the resources sector. If anyone would like to hear further about resource investment opportunities in Queensland, please reach out to me through the meeting platform. I'll be pleased to assist. In closing, I'd like to thank all the panelists for participating today. Kenji, Shigeru, Mike, and Jason, thanks very much for participating. And finally, to all the audience, thanks very much for joining us.
It's been a pleasure.